Hey, what's going on, everyone? Welcome to SPAC's Attack. We are
Welcome, welcome.
live.
That we are. Well, welcome back, guys. Guess what? I'm back. Mitchy's back. I should play the video, but I'll leave you guys be. So we're gonna go ahead and be switching up on the all day live stream and starting up the show in about 2 or 3 minutes here. Chris, let us know what have you been seeing in the market? How's the environment right now?
Yeah, so lots going on out there. There's a bunch of stocks that I am watching, lots of SPACs out there. Across my watch list, I am seeing lots of red. But looking at some of our green SPACs today, so we of course have Fisker up 11% today. That's FSR. That is one that I own. Remember, they reported earnings last week. They talked about reservations. Looks like Henrik Fisker was out with another note on Twitter last night talking about reservations. So they are now over the 13,000 mark. And again, I mean, they were at about 12,500 just last week during earnings report. So they've added 500 reservations just over the weekend. So again, strong interest. And then they have that new deal with Foxconn for that second vehicle. So lots of interest in FSR. I'm seeing Ride Lordstown Motors, RIDE, up 8%. That is one that I actually got into last week. So this was one that fell on that news that Workhorse was not going to get the USPS contract for those next generation delivery vehicles. So I saw that as an opportunity, right? The weakness in RIDE associated with Workhorse. Workhorse owns part of Lordstown Motors, but remember, Lordstown Motors, they don't just rely on production for Workhorse and those possible USPS vehicles. They have the electric pickup, the Endurance, coming to market later. So, I saw this as an opportunity, take advantage of that dip. And then also Workhorse is now working with the USPS to get some more clarity on that deal. Looks like Congress also wants to know, why did they go with Oshkosh over the all-electric vehicle from Workhorse? So, there is the possible upside that Workhorse does end up getting part of this contract after all. And, obviously that could be a positive impact for Lordstown Motors, RIDE. But again, to me, this was a weakness opportunity playing to that fall from the Workhorse news. So RIDE is a new one that I am in, up 9% today, it looks like. And then I'm also seeing Clever Leaves, CLVR, up 6%. So remember, we had the CEO on our show not too long ago, and this was a $9 stock at the time. And now we're back to about 15. This one actually went higher than that. This is a cannabis play, not in the US all the way yet, but they do have the CBD entrant here. And, the CEO told us they're focused on the markets with federal legalization at the time. And obviously that's a big story for the US right now, is will we see federal legalization? So keep an eye on CLVR out there. On that news. And then another mover, MP Materials. What else is there to say about this one? We, of course, had the CEO on our show, months ago. We talked rare earth mining. We talked the Biden administration. We talked China. And, all those things that we talked about then are really coming to light now. Looks like China is working on, regulating exports of rare earth minerals from the country, which could have a devastating impact on the U.S. as we rely on rare earth minerals for so many materials. And MP could be a major solution to that problem. And that stock has just been ripping higher, as it really is the pure play for rare earth mining in the U.S. So another big mover today with MP. And then let's see, what else do we have moving out there? I see JWS, Jaws Acquisition, up 4%. So, this one is the one that is bringing Cano Health public. So that is a Medicare play. I'm actually a little surprised to see that one up today, with the weakness that we're seeing in Clover Health, which we'll, of course, talk to, when we get into headlines later. But, a surprising move there. And then another surprising move today because of Rocket, right? So Rocket Mortgage is up double digits. We're seeing some strength in UWM Holdings. That's ticker UWMC. The largest SPAC deal in history went public. Those shares were trading all the way down in the sevens, and they're up 12% today to 850, as seen kind of as a play from that Rocket strength. So welcome back, Mitch. Looks like you're back in the stream here. What are you seeing out there?
All right. Well, one of the things that I definitely did see is it looks like buy the dip works again, man. I mean, hey, I wasn't mad that I was going shopping over kind of on Friday and Thursday time when the market was going down. I'm not really mad because I look at my portfolio today and I'm definitely happy about where it's heading. But let's go ahead. Let's start up the show. Let's get towards what everyone wants. Which is the interview that we're going to get into. We should be getting into it in the next couple minutes here. I'm going to go ahead here and start up our show with nothing better than our intro. All right, guys. If you guys are watching here from the all-day stream, the video is looking a little bit laggy, guys. So definitely, if you want, go to the separate stream. Go to the SPACs Attack stream. It's going to be a little bit better, and we have the chat working for you. That's where the main chat is going to be going on. The all-day stream really is for you all-day streamer types that are keeping us on the side, watching us all day. But if you want to go ahead and get in towards the direct chat, get in towards the separate show. We'll put it up here in the link here. If you scroll up, you can also find the link here. But definitely, I'm going to put it up in the all-day stream there. So if you guys want to move over towards the separate stream and see a little bit of better quality, jump on in there. All right, guys. So one of the things that I am seeing is there's a lot of headlines, a lot that we need to get towards. So let's go ahead. Let's jump right into it. Chris, what's going on out there? Take us behind the headlines. Let us know.
All right, guys. Yeah, so we want to dive into headlines quick before we get to our interview today. So I'll try to rattle through these and those two new deals that we had announced today. So up first, we have MP. That's MP Materials. Again, I talked about this one a couple of minutes ago. Rare earth mining. Morgan Stanley initiating coverage with an overweight rating and a price target of $57. So MP, up again on that news. And then we have DCRB, so a SPAC that's taking Hyzon public. That's a fuel cell company. They announced that they're going to build the largest fuel cell production facility in the U.S. So shares of DCRB were up yesterday, on that news, again, focusing on fuel cell production in the U.S. GIK, this is a SPAC that I own. We had the CEO, Tim Reeser, on our show. Shares were up 17% yesterday. The company tweeted a picture of an Amazon van with the caption, package status out for delivery. So kind of showing off, that they are one of several companies partnered, on Amazon vehicles. So keep an eye out on GIK. That's a electrification play, and I do own shares of that one. Then we had earnings yesterday from Clover Health, so CLOV, and I know there's kind of a mixed bag out there, so obviously, ready for some heat on this one. I read that earnings report, and I wrote an article on it last night. I wasn't too impressed with it. They reported fourth quarter revenue of $166.2 million, which was up 44% year over year. Full year was up 46% year over year. So they beat on their full year revenue of $673 million. That was a little bit higher than what they put in their investor deck for the SPAC deal. But then they issued 2021 guidance. So revenue of $820 million to $850 million. That's down from their original projection of $880 million. And then they're forecasting members of 68,000 to 70,000 members for fiscal 2021. That is also down from 73,477, which was their original projection in that investor presentation. So, Spencer and I talked on the show yesterday. One of the big reasons for companies to go public via SPAC is they can report forward-looking, earnings and financial projections, right? So Clover laid out this investor deck when they announced that SPAC deal, and their earnings so far, those numbers are not hitting in line with what they laid out. So shares were up at one point after hours, and then they dropped. They are down today. This has been a disappointing SPAC. We talked on the show and said we would be sellers in that $14 to $15 range. So hopefully a lot of you were able to get out and did not chase this one. For me, I got to see more from them. They really need to report some partnerships or some deals, or otherwise this one could lag for the rest of the year. Movers yesterday. So we had VACQ up 36% on that agreement with Rocket Lab. We had NSH up 5% on that deal with Spire Global. RSVA merging with battery company Enovix up 25%. And TPGY merging with EV Box Group, that's a charging infrastructure company, up 21% on the day. And then turning to our deals today, so I don't have a ton of color on these deals yet. TWND, that's Tailwind Acquisition, they are taking Complex, a leader in cloud native risk analytics, public. So they see revenue in fiscal 2021 of $141 million, up 47%. And fiscal 2022, $210 million, up 49%. Valued at $1.2 billion. Shares are actually trading down today. So it looks like, that deal is just not in favor with the market. And then our second deal announced this morning, we have ACND. They signed a deal with Beacon Street Group. That's a subscription platform for financial research, software, and education. So this was a $3 billion deal. They see fiscal 2021 revenue of $484 million, up 28%. Fiscal 2022 revenue, $651 million, up 34%. So again, $3 billion deal. Shares of that one are down 6% as well. So market not loving either of these two new deal announcements. And then a note, which we'll dive into later this week. I'm seeing out there that we could have, up to 16 new SPACs issue and price shares today. So keep an eye out, as I talked on the show yesterday about, that unit strategy of buying some of these SPAC units close to $10, where you get, that net asset value, and then you get the free warrants to go along with that. So I'll be watching to see if any of these units, trade under 1050 today. And then turning to our calendar, we have CFII voting on that merger with View Inc. on March 5th. That is the smart window company. And I'm seeing shares of CFII, trading right around that $10 level. So keep an eye out on that one, as you have the opportunity to trade those shares back in at net asset value at the deal time. And then I'm not seeing earnings this week for any of the SPACs on our watch list, but we will keep an eye out. We have Rush Street Interactive reporting next week on March 10th. So that's what I've got for headlines and those two new deals, Mitch.
All right, guys, as you guys can see from the headlines, we had some movement. One thing I definitely note is that it looks like GNOG and RSI is at least catching a little bit of a bounce. That I can see from the watch list. But definitely want to get into our interview. One that I'll definitely keep an eye out is just keep an eye out on that MP. I've been waiting for a pullback in this one, but really it's a tough one to get the pullback now because the story had been so hot, and it's at a price that, when we first started, we saw this stock at $16, trading 16, 15s, and now you're seeing a price target of 57. So, wow, that MP made a move since our interview. All right, Chris, so it looks like we got Rob waiting here. So let's go ahead and let's get him in here. Do you want to go ahead and introduce?
Yeah, awesome. So guys, we're excited. We have another interview today. So we have with us Rob Striar. He is the CEO of Bullhorn Holdings. This is the SPAC with the ticker BHSE. So welcome to the show, Rob.
Hey, Chris. How are you? Thanks for having us today. Appreciate it.
Welcome, Rob. So I'm going to go ahead and I'm going to get on out for a little bit, let Chris knock some questions out, and then I'll jump right back in. Here we are.
Fantastic.
All right, perfect. So, this interview will be a little bit different for us. We normally interview, companies who have already announced those deals. So I don't want to get you in trouble at all. So I know there will be some stuff that you will not be able to talk about, but we'll try to be, as broad-based as possible. But before we get into questions, I read the filing and I see that you yourself have worked for a variety of Fortune 500 brands, including Disney. You also worked with the NFL Players Association and the NHL. Tell us a little bit about, your experience working with some of these companies.
Sure, no, I appreciate it. I'm 20 years in, let's call it the sports and entertainment space, but really it's 20 years of leading global strategy for several different groups, ranging in that sports and entertainment space. So we've been leaders on strategy for groups like the NHL. We've worked in racing and cricket, and a ton of work in international soccer, very substantially again in entertainment and brand and building consumer brands. So we've largely been, how do you build it? How do you grow it? How do you drive revenue for it? So for years, we've been seeing deal flow. We have a unique set of relationships in the marketplace that allow us to feel confident in being able to find a really, really strong funnel coming into the SPAC space as well. We were able to kind of, with that, assemble what we felt was an all-star team going into this SPAC process. But we're largely, before getting involved in the SPAC, we've been involved on multiple M&A and advisory deals, both of selling teams, being involved in leagues, and massive consumer transactions.
Perfect. So, I guess the biggest question out there is, we've seen, hundreds and hundreds of SPACs launch. So, why is Bullhorn launching a SPAC? What's the big purpose here with BHSE?
Sure. So we're a little bit different, I'd like to think. First, we looked at first launching a SPAC back in 2018. So we're an incredibly well-researched team on this. This isn't a new phenomenon. We didn't wake up in 2020 and say, let's do this. We looked at this going all the way back to 2018 and thought the SPAC vehicle was a phenomenal institutional way to bring a company public, to give it the resources that it needed to be successful. And that at the same time, we had truly unique deal flow to be able to do that. My business partner in this, Chris Calise, who's also our CFO, is a brilliant financial strategist. And he really looked at the structure very, very carefully. At the same time, we were predicting that there was going to be a massive inflow of institutional dollars into sports and media. And we are indeed, seeing that in other parts of the market. So we thought by being ahead a little bit, by having real planning, that we'd be able to bring a fantastic company to the public market. We really wanted to also look at companies that were content rich, had super high growth, and that were innovative going into what we think is going to be a highly competitive market.
Perfect. Yeah. So all the way back to 2018, that was really, before we saw this crazy boom in SPACs, so probably, this would be the year to launch, last year versus 2018, based kind of on the market. One of the things I see is we have a lot of different sports related SPACs out there, and they all vary, in kind of the target area and the size. So, relatively speaking, BHSE is on the smaller size of the money raised in the IPO. How do you, compete with some of these other sports SPACs that are out there searching for similar targets?
Sure. I mean, I think we were either the first or second sports SPAC out there, kind of this new wave of them. As far as the size, structure, we believe, is more important than size. And Bullhorn has both the sports and the financial relationships to scale up to a larger deal size. So, really, as you look at it, and it's in our S1, we can do a deal that's anything from 500 million, probably to $1.5 billion, $2 billion. It's really, in this market, very much up to the pipe and very much up to the resources. However, by having a smaller SPAC, it gives us a very nice competitive advantage at the same time, as we really are a more friendly partner for a deal combination. Because we're structured and our size, it benefits our partner coming in. So there's less dilution. So it makes it an easier process for a target company, for an acquisition company to succeed. Really, our goal is to be a fantastic partner. And we take that responsibility very seriously. It's part of why we built a very operational board, and we can discuss that. But we built a highly operational board so that we can bring real resources, not just the investment, but we want to make sure that we're a great partner to any acquisition that we're looking at.
I think that's a great point when we talk about these different deal sizes and the structures. A lot of these private companies probably want to go public for, various reasons, but they also like to keep, majority control and some of that percent ownership. So, the size, I think, definitely, may play into your advantage, as you said. So I see in the filing, targeting, again, the sports, the entertainment side of things. It also mentions sports franchises. I know you can't give me specifics. Can you just walk, a little bit through, what kind of companies and sectors, are you looking at, with that being said?
Sure. I think we're looking at high growth first and foremost. What has real high growth potential, a large addressable market. I think everyone's looking for that kind of TAM, high addressable market. And innovative companies are very important. There's people who are going to harness technology, people who are going to use data, and really grow that business. While teams and leagues are obviously a focus for ours, and it's an element, the other types of businesses, as far as what are the types of sports, let's call them, whether that's gaming, gambling, or data that get involved in this, are very important. We view sports very much as a platform. I wouldn't say it's go so far as say like an incubator, but where can you operate sport more as a real business and create more growth? And it's something that we've been intimately involved with for years, is creating new revenue channels and more growth for teams, leagues, and brands.
So, in there it said sports and entertainment side of things. Is that, exclusive together, or would you also be looking at, possible entertainment companies outside of the sports world?
Oh, again, we can't get into direct targets, unfortunately, in this. But, it's going to range for us from sports and entertainment to things that combine. I think sports has a real combination of entertainment and things that are content driven and that are media driven as well.
Perfect. So, I want to talk a little bit about a couple names attached to this SPAC. Obviously we've seen the attention, Baron Davis. So former NBA player, he's an advisor here. He's an entrepreneur, investor, and businessman. Can you talk a little bit about, Baron Davis? What value does he bring to this SPAC?
Sure. So, I think Baron joined our board way before, let's call it the celebrity influx of people coming into this. And Baron wasn't added because he's an NBA player. Baron's added, he's a well-known, he's a savvy investor. He's done extremely well on that side of it. He was an early investor in vitamin water. He just did very well in the HERS deal that went public through SPAC recently. Sees an entirely different deal flow, especially West Coast wise. Very smart, again, very, very savvy, a very creative thinker, and has provided us a host of different resources at the same time.
Perfect. So then another name I see is Michael Gandler. The thing that jumps out to me in the prospectus is he's got a lot of experience in the soccer market. So, relationships with Inter Milan, MLS, and, I know, again, you can't get into specifics, but, you mentioned sports franchises, could that, so we obviously have the 4 major sports here in the US, but, are you looking past that possibly to, soccer, esports, some of the other, growing sports leagues?
I don't think there's any team or league that for us is off the table. We've done extensive work internationally and globally on how you build sport, whether that's taking a U.S. sport property and helping build it internationally, or taking international brands and growing them through a global footprint. So we're really comfortable on any side of that if that's a path that we decide to go down. Michael was a lead executive with Major League Soccer. He went through the IMG CLC side on collegiate licensing as well. And then he went and he ran as chief revenue officer for Inter Milan. And so, we wanted somebody who understood real revenue from teams and leagues and a brand perspective as well. It's something that we tried to do with our entire board. And when you look at our board, it's highly operational, right? It's not a group that is sitting on top of this and, not working and not involved in deals on a daily basis. Stephen Masters for us, who's former president of Nielsen Sports, both domestically and internationally, has been fantastic. He also is one of the lead consultants for the American Gambling Association, opens up a whole nother avenue of resources. And so, between those people on our board, Doug Scher and Jeff Wattenberg as well, we feel we have a really fantastic board with a lot of insight. And then underneath that, an entire support system and advisory.
Perfect. So, in your prospectus, it said looking at companies valued between 300 million to 900 million. You just talked, a little bit maybe of deals over $1 billion. Is there, obviously that's a wide range here. Is there kind of a sweet spot for, valuation at all for, a target company here?
Yeah, I don't think anything that unfortunately I can get into on this. For us, again, it's about growth. And we're looking at and identifying teams that, or I should say teams, properties, and elements that are poised for hyper growth.
Perfect. So one of the things that stood out for me, we've seen lots of SPACs hit the market, maybe not so much in the sports world, but in other industries that are pre-revenue. And in your criteria, it talked about finding a company with, at least $100 million in revenue. Is that, a make or break level for these companies to already have existing revenue?
I don't think we have a true make or break. We have an internal criteria, and it's called an internal filter that we're looking at right now. A lot of it, again, goes to, addressable market and goes to revenue potential and growth.
Perfect. So, again, in that same criteria, it talks a little bit about, secondary potential revenue streams. So, your board, you have a lot of experience with these different sports teams, different sports leagues, different media companies. Is that the plan to, maybe take hold of, one of these private companies and try to add some additional revenue streams, in additional business lines, if you can get into that at all here?
As you'd expect, I can't get too far into that. But, I think as you would expect, anything that we're looking at right now, and any company that we're targeting is going to have what we consider to be a rock star management team and people that have a real proven track record of success. And so they're going to bring their own planning to the table. And then as a board, we want to be able to bring additional resources and insights. And we do think that anything that we're looking at now is going to have additional revenue streams off of what they currently have so that they can build bigger.
Perfect. So I want to turn a little bit to the negotiation side of things. Again, I know you can't get into specifics, if you've already talked to, any of these companies, but we're in a different time now, right? With the COVID pandemic going on. So, years ago, maybe you flew and met with all these different companies, that you were exploring deals with. How has the pandemic changed the deal-making side of things?
I think you're absolutely right. In years past, we would have been on a plane, probably meeting with plenty of people. I think the Zoom process, let's call it, has maybe exacerbated and moved forward a lot of time frames. And I think, in essence, we're spending probably more time with people now than we've ever spent. And we're having longer conversations and deeper conversations because travel, scheduling is far easier to do. The other nice part about having 20 plus years of relationships is you have a real good feel for a lot of people in the industry and in multiple industries. And so you're able to get a real good feel for management teams really, really quickly.
Perfect. And then, again, I know you can't get into specifics on the deal making process, but maybe walk us through, what does a day or a week look like, from the SPAC side of things of, exploring, potential targets. Is it, researching these private companies? Is it doing meetings? Is it, meeting with the board? How is the week kind of split up for BHSE here?
Well, I would say we're probably all a bit research and data heavy to begin with, and enjoy that part of it. The rest of it, I can speak for myself. I can't speak for the rest of our team. I start my day every morning at 4:30 in the morning. I'm probably on my 12th cup of coffee as it is. It is intensive as far as conversations. It's a little bit of scheduled Jenga of moving around pieces and elements, so that we make sure that we're speaking to all of the people that we need and stakeholders that we need and moving the process forward as quickly as possible.
Then I have one more question before we get to Mitch and some possible, chat questions out there from our viewers. And I don't know how much you can go into this, but I just want to clear something up. So Baron Davis is attached as an advisor to this SPAC. We saw some rumors out there, Baron Davis looking at Reebok with his partner, Master P. Can you just, let us know, Master P is not currently affiliated with this SPAC. Is that correct?
That is correct. Master P is not affiliated with the Bullhorn SPAC.
Okay. And I know there are some viewers out there, asking the same thing. I've tried to, clear that up out there too. Again, Baron Davis attached to this SPAC, but Master P is not. So, Mitch, what do you got for more questions from us or questions from the chat?
All right. Looks like I got to fix my focus here. The autofocus not working here. But all right. So the question I have was more along, I was looking at, of course, I'm a big sports fan, so I'm looking at minority stakes in teams. And how is that approach there? Are you guys looking to more of a minority stake? Are you guys trying to maybe look for some teams that are on the cheap? One thing I noticed with the pandemic is that a lot of reassessments for evaluations needed to be met, now that we just don't have that audience that we used to have. So how are you guys approaching that and kind of looking at the targets? Are you guys looking for certain teams that might be discounted because of the pandemic?
Yeah, again, I wish I could comment on that. I wish I could get into it. I think it dives into targets in a way that unfortunately I can't discuss it. I will say, as a broad, not related to Bullhorn, I don't think you've seen a lot of, especially for U.S. teams, discounting across the market. There's some what's called discounting side in Europe, and I think what we've seen so far is more private equity and institutional money going into those types of deals so far.
Perfect. I appreciate that answer. It definitely gave us some insight, at least how they've been approaching it. So the next question I have, of course, and I don't expect an answer from this. You can either smile or just turn away here. But I've heard this name, and you don't have to even smile or whatever. Just how's the name Sports Radar sound? And I'll tell you at least from that smile, I can tell you at least, hey. I full disclosure, I do own your stock. I am long. I've been long for about over a month now.
Excellent decision.
Hey, one thing I definitely say is I have diversified in a bunch of sports SPACs, and I believe in the industry. So definitely looking towards to which companies each of you guys are going to get. There's a lot of them out there, and I think that in the end, there's some really good growth potential in some of the companies that are being mentioned out there. So looking forward towards that. I'll bring Chris back in so that we can bring maybe some chat questions in here. I know that we got a couple out there, so go ahead, Chris.
Yeah, so we'll try to get to some chat questions. Again, guys, remember that Rob can't, give us all his target companies or share that information. So, we'll try to ask these as broad-based, but so someone asked, what's the overview of the target selection process? Maybe give us, some sort of, number. How many companies are you looking at in a given week or a given month? And how do you kind of whittle down that list to, the best possible target out there?
I wish I could give you like an easy number on it. We were very fortunate in that between our own funnel that we built very quickly after we priced in end of October, beginning of November, plus incoming deal flow, we've kind of had our pick of targets that we want to look at. What's fascinating to me is the number of incoming outreach that we've had. I think some of that did indeed go to our deal size, and that dilution factor is that because in theory we're a smaller SPAC, and I don't view it as smaller, I view it as again, better opportunity for a target company as opposed to smaller. Again, we can flex up really, really quickly and really big as we need to.
Awesome. And then the last question I have from you, and I just want to make sure that we're right on this. So someone asked in the chat, why 18 months over 24 months? Is that correct, that the SPAC was launched with the 18-month horizon? And then if that is correct, which, judging by that head nod, it looks like it was, why 18 months over 24 months?
I wish there was a more complex answer for you, other than we were really confident in our deal flow. We didn't think we were going to need the 24 months. We felt confident in it, and that's it.
Hey, that's a great answer. We'll take that. Confidence is key in this market. Again, guys in the chat, I know we had some other questions out there. Everyone wanted Rob to just, tell us which company he's bringing to market. If he could break that news to us on air, we would love it, someday down the road, but unfortunately that's not the case today. So again, we want to give a big shout out to Rob Striar, the CEO of Bullhorn Holdings. That's ticker BHSE. So thank you, Rob, for joining us on the show today.
I appreciate the time, and I appreciate the social media and all the audience that everyone's pulled through. And it's a really phenomenal community that I found in the social media side of SPACs. And I appreciate kind of being adopted by everybody into that. So thank you.
No, we appreciate you coming on. The SPACs Attack family has definitely been growing. We try to do this every single day to get that information out there to the retail investor, and definitely get the information out there on SPACs that are needed. I did see that this company was based in Miami, and I grew up in South Florida, so definitely, hey, go ahead, go to maybe some Fat Tuesdays for me on the beach and enjoy the weekend. I'm sure you will, Robert. I appreciate you coming on, and we'll bring you back next time.
Thank you, guys. I appreciate it.
Thanks, Rob.
All right, guys. Hey, you guys heard it here, guys. One thing we definitely been doing, guys, is reaching out to more and more executives to bring you guys the information that you guys need to learn about these SPACs. And the best way, really, at the end of the day, is going to be, hearing it from the CEO. And that's what we really try, guys. We really try to get you guys those executive interviews so that you guys can be informed on these stocks. So what do you think, Chris?
Yeah, this interview was a little bit tougher to do, right? So we've been doing the interviews with, companies or the SPAC company that, have already announced deals. So there's a little bit more wiggle room on what they can and can't discuss. So, today was all about, just getting a sense of, what is BHSE targeting? What is the growth of the sports market? So I really like that management team that he has. They have ties to, the NFL, the NHL, and, lots of ties to soccer. I heard him mention one of the gambling associations, board also. So, maybe we see sports betting being a target area, but, lots of different areas to go with sports, whether it's sports team ownership, sports media, sports betting. I love all these sports SPACs. I'm excited to get some deals done because we haven't had as many deals done in the sports market, of late. And I really liked, I was interested in hearing, about this deal size. So again, this is on the smaller size for money raised, right? And, when Rob said, that could be a benefit, right? If you're a private company and you want to go public, maybe you don't want to go public with $1 billion SPAC because you don't want to give up, a bunch of control of your company, take on a bunch of new people on the board of directors. You want control. So maybe, one of these private sports companies, is looking at Bullhorn and saying, hey, we want you on board, as a small partner, to take us public. So I guess that's what I took away from the interview.
Yeah, so some of the things that I'd mentioned, we it's all definitely a difficult interview there for us to get some real information from you. But one thing that I did get, and I liked how he answered it, was some insight on the industry, right? So I asked about the discounted sports teams because I wanted to find out to see if, teams have really taken a hit in their evaluations because really, I mean, just think about it. You can't go to sports arenas like you used to. So definitely there's some revenue hit there. And how's that affecting the bottoming line and the evaluation process of these companies? And so that's why I asked that question. And he didn't give us too much insight on the American one. He said that, pretty much not too much of a discount there, but he did give us some insight on kind of that European look and maybe some of the soccer picks that are out there right now. Because at the end of the day, guys, the pandemic is definitely going to affect these evaluations. And so what I think could happen is maybe these SPACs are targeting these companies also because they're at that discounted price. Because if I can get a team at, let's say, a 30% discount than where it was valued pre-pandemic, then hey, it gives me great upside for the potential revenue once we get through the pandemic and seeing the kind of the audience comes back into the stance. So that's kind of the things that I'm paying attention to. I also mentioned Sports Radar, guys. You guys saw that smile. I don't know who's going to get Sports Radar, but I got a couple of these sports SPACs specifically with my idea that maybe Sports Radar gets purchased out, and I think that one's a big move. I think if you look at DMYD when they released the Genius Sports News and how they're reacting now, I mean, what's not to say that if this one gets Sports Radar, then it's just right back up there towards those levels where you see DMYD, and that's why I'm targeting these. So it's going to be interesting. BHSE right now is at 1003.
Mitch, I want to touch on that point you brought up. So excellent point on the discounted values of sports. So, we talk fundamentals on the show. We talk story, right? Story stocks, the story of the SPAC. And, I think Mitch is hitting it on. And again, maybe Rob didn't give the answer that we, wanted to hear about the discounts. But if you follow the storyline, right, all these sports teams, competed last year without fans in the stadium. And they also saw television, viewership down. So that means that their revenue, for the year was down. So how do they make up for that revenue? Some of these teams will be looking to sell a stake in the team, or they'll be looking to sell out completely, right? Because maybe these owners of these sports teams got hurt from their other businesses as well. Owners of sports teams don't just own sports. A lot of them own, other businesses, or they're fund managers, and all that. And then, we saw that trend with now sports betting, right? More states are legalizing sports betting to make up for that loss of revenue. So follow the story, follow the train, right? The missed revenue, the where they need to make it up. So, we talk about a lot of SPACs, right? Being, the market saying they're overvalued, right? I think you're going to see some sports deals done, as Mitch said, at a discount, right? And, that discount may not pay off immediately, but in a year or two, when that revenue returns to 100% occupancy in the stands, when, sports betting takes over and they get that additional revenue, I think sports is a great market to be in. And that's why I've been looking at so many of these sports SPACs. I know you have as well, Mitch. So, I just want to emphasize that point you said with the discount in sports teams. And again, Rob said, maybe not so much in the U.S. I tend to think maybe it is there with some of the smaller market teams maybe, but soccer, especially in these European teams, there are some discounts out there for companies looking to acquire.
Yeah, I was watching actually some SPAC content a little bit earlier in the week. And one thing I noticed, guys, is that they mentioned a lot of maybe NHL targets. Hockey is very adaptive, and you could see some of those companies be kind of worried about their revenue. And so with that, looking for a stake, looking for a minority stake to keep them around. There's going to be a lot of you can look at the major sports, like let's say football or basketball, and you could think how those could be all right. But those lower sports, the ones that don't get that much revenue, are the ones that are really struggling here. And the biggest thing is they're not quick to adapt to, let's say, the safety procedures that the NFL or NBA can adapt to, just because the money isn't as much. There isn't. They just can't be spending and spending and spending in the NHL. They actually have to be smart with their money and how they spent that revenue. So definitely, I'm going to keep an eye out. Some of the ones that I have, guys, I have SEAH, I have BHSE. I've even thought about getting a little bit of our, Red Ball acquisition, Redback, but I'm just kind of confused on that one, and I'm not sure where they're heading, and I don't think they know. And with that being said, I think that potentially with that one, at least I think the Red Sox is out of the question now. The biggest thing to pay attention to now is going to be where do they kind of readjust and start hearing another rumor, because I think these guys, I really thought that they were going to get, the Red Sox, and I thought they were trying to work out particulars, but as you can see, it definitely changed. And this is Billy Beane, man, Moneyball. What's not to say that he doesn't look for maybe a different baseball company or a different baseball team. So keep your eyes out there. I'm really excited because I personally, I would like to see kind of one of these SPACs actually get a team, because I think in the long run, we need one, and a successful one, to kind of get more into the SPACs, and we could potentially see these even into the next year if we could get one and it be successful.
Yeah, and there just aren't a lot of publicly traded sports teams out there, and as big as the fan base is for sports, that's I think something that's missing, right? People want to invest sometimes in brands they know, right? Companies they know, they love, right? It's why people, they invest in Apple, you buy Apple products, you're loyal to some of the stocks that you own, and sports, we have a couple publicly traded ones out there, but not a lot. And Mitch, that NHL point I think was spot on. That the NBA and NFL and even college sports, right? They get so much of their revenue from TV deals. So when they didn't have the attendance, they still have these large TV contracts to make up for that. The NHL doesn't have a huge TV deal, and they actually, NBC Sports Network that they were airing games on, it sounds like Comcast is cutting that channel. So I don't even know what that means for NHL coverage and that rights deal. So maybe that ends up hurting, NHL teams down the road even more. And then, baseball has a decent size, TV deal, but baseball's attendance too, right? Baseball plays 162 games a year. They have 81 home games. So when you don't have fans filling the stands for 81 games, that's a little bit different than an NFL team, that has only 8 home games a season to put fans in the stands. So, definite storylines to watch with the difference of sports here. So I know we're getting close to time. The one thing I want to say, if you don't watch any of our other shows, you may have missed this news. But you hear us talk about Kathy Wood a lot on the show, right? Kathy Wood, and she's a fan of SPACs, right? And I give her a lot of credit for that. She's buying SPACs before they even complete deals, which you don't see that with other ETFs, right? They're waiting till deals are, completed, and they're not even really adding a ton of ETFs. Kathy Wood, one of the best fund managers out there, she loves SPACs. She's actively adding SPACs to a bunch of her ETFs. If you guys haven't heard, Kathy Wood is going to be interviewed tomorrow on Benzinga by our CEO, Jason Raznick. You do not want to miss this. So interview is going to be 2 p.m. Eastern time to 3 p.m. And for those of you watching this, today, I want to let you know that you can actually possibly ask her a question. We have a contest going right now where 3 viewers are going to be able to ask questions from Kathy Wood. So, definitely keep an eye out on that, and, don't miss that interview tomorrow.
All right, guys, like always, guys, we're going to be wrapping up and moving towards Zinger. Actually, just Power Hour now. I don't know why I keep saying Zinger Nation, but we are all Zinger Nation. We are all part of Zinger Nation. Right, Chris?
That's right.
Yep, and like always, guys, definitely smash the like if you got some value out of this. I'm going to keep an eye out on the stock that I'm pretty big on now, Chris. I'm pretty big on RMO now. I've been sizing in. You guys know that I'll be keeping an eye out. I'm in the green and feeling good. So I'll keep an eye on that one, and we'll keep moving through here. Like always, guys, definitely smash the like button, smash the subscribe. Move on over to Zinger Nation, guys. Zinger Nation's going to be starting up right here. Let me get you the link so that you guys can move on over here. All right.
I just put that link in for the Kathy Wood question. So,
boom.
Again, make sure you sign up. That's a great contest, right? To be able to ask Kathy Wood a question. Who wouldn't want to ask Kathy Wood a question with all the success that she's had in the market? I know I've got tons of questions I'd love to ask her. So make sure you sign up for that, and, that great opportunity. And, make sure you watch this interview tomorrow. Kathy Wood's done so many interviews, but I've watched a bunch of them, and they're all different, right? She's asked a wide range of questions. She answers all of them. She's very transparent, right? It's an active ETF. I'm looking forward to that interview tomorrow with Jason Raznick.
All right, guys. We'll see you guys next time on the SPACs Attack, guys.